All right, let's dive right in. We're going to pull back the curtain on the high-stakes world of financial crime. And look, this isn't just about some dry rules and regulations. It's really about understanding the criminal playbook and, most importantly, your role as the first line of defense. So think about this for a second. How does a criminal take a giant pile of illegal cash, we're talking millions, and make it look totally legitimate? I mean, how do they actually spend it without setting off all sorts of alarms? That process of turning dirty money into clean, usable assets, well, that's exactly the problem money laundering is designed to solve. Okay, so if we're going to fight it, we first have to understand it, right? So let's crack open the criminal's playbook and see exactly how this whole thing works. And you'll see it's not just one simple act. It's actually a pretty sophisticated, multi-stage strategy.
So at its very core, this is what money laundering is. Think of it like financial camouflage. The whole entire goal is to wash that money so thoroughly that its illegal roots are just gone, wiped clean. That way, it can flow right back into the regular economy, no questions asked.
This whole process usually breaks down into three main stages. Okay, first up is placement. Now this is the riskiest step for the criminal. It's where they're physically putting that dirty cash into the financial system, maybe through a bunch of small deposits. Next, they move on to layering. This is where they get clever, creating this super complex web of transactions, wire transfers, you name it, anything to hide where the money originally came from. And finally, you've got integration. The money looks clean now, so they bring it back into the economy to buy stuff. You know, property, fancy cars, investments, making it look like it was legitimate income all along.
So that's the criminal's offense, their attack plan. But you know, for every playbook, there's a defense. So now let's flip the script and look at the government shield, a really powerful set of rules designed to blow up this whole process.
And this is it. This is the shield. It's called the Bank Secrecy Act, or just BSA for short. You know, this thing has been our main weapon in the fight against money laundering since way back in 1970. And the core idea behind it is actually pretty simple. It basically deputizes financial institutions, yeah, including mortgage lenders, and makes them partners with law enforcement.
And the goal here is super straightforward. It's all about throwing a giant wrench into the criminal machinery. This isn't just about creating paperwork or busy work. Think about it. If criminals can't wash their money, it gets a whole lot harder for their illegal businesses to make a profit and, to grow.
So the Bank Secrecy Act, it isn't just some vague mission statement. No, it's a real toolkit. It's filled with very specific requirements and reports, all designed to catch these guys at every single stage of the laundering process. All right, let's start with probably the single most important number you need to know from the Bank Secrecy Act. That number is $10,000. I want you to think of it like an automatic tripwire. And here's exactly why that number is so critical. It triggers something called a Currency Transaction Report, or a CTR. And this is not optional. Anytime more than 10 grand in cash changes hands in a single business day, a report has to be filed. It's a really straightforward black and white rule.
Okay, so this is absolutely key. You have to understand the difference between the two main reports. On one hand, you have the CTR. It's totally objective. It's all about the number. Did more than $10,000 in cash move? If the answer is yes, you file a CTR. Simple. But then you have the SAR, the Suspicious Activity Report. And this one is subjective. It's all about your professional gut feeling. It doesn't matter if it's for $500 or $50,000. If a transaction just feels off or shady or suspicious in any way, you file a SAR.
And one more thing about SARs. Time is critical. The clock literally starts ticking the second you spot something suspicious. You've got 30 days to get that report filed, because law enforcement needs that information, and they need it fast. So, we've looked at the criminal's playbook. We've looked at the government's shield. But where do you fit into all of this? Well, this is the part where all that theory becomes your day-to-day reality.
Honestly, this quote right here says it all. You're not just some bystander in this fight. In your job, you are the gatekeeper. You're the one on the ground, seeing the transactions, talking to the clients. You have the very first best chance to spot when something just isn't right. So what exactly should you be looking for? Well, these are the classic red flags. Big cash deposits that just don't have a good explanation. Or how about this one? Someone trying to be clever by structuring their deposits. Maybe they put in $9,500 on Monday and another $9,500 on Tuesday just to try and sneak under that $10,000 radar. That right there, that's a huge red flag. Or maybe you see money coming in from all these different unrelated accounts. These are the kinds of signals that should make you stop and think, what's going on here?
Okay, I know that was a ton of information to take in. But whether you're cramming for an exam or you just need to keep all this stuff sharp for your actual job, I've got a few simple memory aids that are going to make these key points stick. All right, for those two main reports, just remember this. CS equals Crime Stopper. The C is for CTR, and that's all about cash, that $10,000 trigger. The S is for SAR, and that is all about suspicion. CS, Crime Stopper. See? Simple.
And what about the 3 stages of money laundering? Just remember the letters PLI. A kind of cheeky way to remember it is please launder it. P is for placement, L is for layering, and I is for integration. It's a super quick way to remember that whole criminal process from start to finish.
And last but not least, every financial institution has to have a solid anti-money laundering program. So what does that program need? Just remember to give them a tip. T is for training for all your employees. I is for internal controls to monitor everything. And P is for clear policies and procedures. A good program needs a tip.
So, at the end of the day, it really all comes down to this one question. You've got the laws, you've got the reports, you know the red flags to look for. Those are all just tools, but tools are only as good as the person who's prepared to use them. The whole system, literally all of it, depends on your sharp eyes and your good judgment. So the real question is, are you ready to be that first line of defense?